Ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is the Kickstart video. In the Kickstart video, I take a look at three major currency pairs: the euro versus US dollar, dollar versus yen, sterling versus US dollar. From a technical perspective, today's date, January 7th, 2025. Let's get started. Looking at the hourly chart of the euro versus US dollar, yesterday the market surged to the upside off of that Washington Post article, Trump tariffs being less than expectations, but later denied. But nevertheless, the price did move higher. We did break above the 50% retracement. That's of the move down from the December high to the December low, or January low, I should say, early January low. That level came in at 1.0426. You can see the price moved above that level, but then rotated back to the downside. That rotation to the downside came down to test the 200-hour moving average, to test the 38.2% retracement of that same move to the downside right through here. The market found support buyers there, and also in the early Asian session right through here. So that gave the buyers to go ahead to push higher, and they trundled to the upside, getting above the 1.0405 level. Recall from the daily chart, that 1.0405 level represents a 50% retracement of the range since 2022 low to the 2023 high. The 50% retracement level comes in at 1.0405. Going back to the hourly chart, getting above that 104.05 level, gave the buyers even more confidence to push up toward the 50% retracement, and then through the level where the price once again moved up to the near the high price from yesterday, which is somewhat random. There's nothing really that says the price should have stopped there, and found willing sellers. Price pushed back below 50% retracement. It was moving down back below the 104.05 level, so up and down, trading here today. Back below the 1.0405 level, that 50% retracement level, stay below that level, and we're going to have continue to be focused on this 38.2% retracement, this 200-hour moving average area, right around the 1.0375 to 78 area. That is a key support. We held it once, we held it twice. We'll see if the market can continue on the downside, if it should go down there and find support buyers. Let's next look at the dollar versus yen. And in this currency pair, the price extended to a new high. The market in the Asian session just started to trundle to the upside. Then we had verbal intervention from the finance minister, Cato, who weighed in with some intervention, again, emphasizing that the government is alarmed by the sharp one-sided moves in the foreign exchange market, and that helped to turn the beat around, if you will, after reaching 158.407. What did that look like on the daily chart? That high price right here was the highest level going back to, well, around July of 2024. The high swing area of this daily chart comes in at 158.86. Keep that level in mind. I have a horizontal line on the hourly chart up there at the 158.86 level as a reminder. Nevertheless, the price did move back to the downside. And where do we go? Well, we were right back to the 100 and 200-hour moving averages, which are now near converged right here. The market came down to it and found support buyers against that level. So guess what? The 157.37, 32, something like that. I think it's 37. 157.37 level is going to be the key barometer for both buyers and sellers in trading here today and going forward. If the price can stay above that level, the bias remains more bullish, and we'll look toward these high prices right through here. As the next key target. You can see the ceiling right there that was broken in trading here today. Get above the 158.09 level and opens the door toward the 40 level, then toward the 86 level on the top side. Conversely, break below the 100 and 200-hour moving averages should open the door for further downside momentum, like it did right here in trading yesterday. But that momentum, after taking the price sharply down, a little lower and below previous lows, except this one right here, found buyers and pushed back to the upside. So just be aware, this is the barometer for both buyers and sellers. Stay above is more bullish, move below is more bearish, and see what happens from there. Finally, let's take a look at the sterling versus US dollar. And this currency pair, like the euro versus US dollar, based fairly nicely against the 200-hour moving average. That's a green line in this chart right through here. We did find those support buyers in the early Asian session that helped to push the price higher, and until we reach the falling 100-bar moving average on the 4-hour chart. You have to go back to this time right here, the last time the price traded above that level, which is around December 17th or thereabouts. The price found willing sellers against or near that level, I should say. It did move a little bit above it, as you can see, but then rotated back below a level, and we've seen an increase in line pressure. We are moving back toward the broken 38.2% retracement of this move to the downside from the December high to the January or end December low. That 38 comes in at 1.25269. If we break below that level, then we start to look toward the 100-hour moving average or 200-hour moving average once again, where again we found support earlier in the Asian session. So be aware of that level. That's going to be a key barometer not only today and going forward for this currency pair. So a battle going on in the sterling, but after the rise to the upside, coming back down, similar to what we see in the euro, as the ups and downs seem to be in order for some of the major currency pairs in trading here today. So that's my technical look at the three major currency pairs to kickstart your day. My name is Greg Michael Oski. Looking forward to it, your trading. Bye-bye now.